What's going on, YouTube? Novadella Investment here with another video. It's been a while since I've been away. The market has been crazy, man. Like we got tariffs going on. I'm talking about like not just like normal 3-5% type tariffs being thrown around. I'm talking about like in the hundreds between the U.S. and China specifically, which has had a pretty negative effect on the market. Um, so I'm gonna break that down for you. I'm not gonna get into politics because I don't do politics. Um, there's um, there's right and wrong and parties on both sides and whatever else. I'm just concentrating on my portfolio and what I'm doing within the market during this time of volatility. So let's get things started. So looking at the portfolio, you can see that for the week this week we're the account value is sitting at $18,707. You can see that that's a significant drop from the last time I posted. I think the last time I posted, I was in the 21,000, I believe 21,000 and change. 21, I think it was 21,007 specifically. But now we're down to 18,000. I think at one point, within the last 2 weeks, we were down into the 16th. I think like 16,000 or something like that. But we're back to 18,000 right now. I'm sure there's gonna be more pain to come in the next few weeks to months. So who knows when this thing is gonna be right? It's gonna be um, I guess over with when it comes to just how the rate that we're dropping as far as portfolio value and market share and so on and so forth. But we're in it for the long haul. Hey, we're diamond hands, as they say. Um, we're invested in quality products, things I believe in. So I'm not panicking. For my portfolio to be at risk of losing everything, it would be a, a, the entire economy would have to collapse, and that's I mean obviously businesses are still open, right? People are still buying things, consumers are still buying things, businesses are still employing folks. So for me, I'm not really as panicked as most people are when it comes to what the market is doing currently. So, so let's move on from there, right? So 6% this week, which is pretty good. However, let's look at the monthly. The monthly is whew, down 3%. However, um, the silver lining in this is the fact that we've collected $389 in dividends during that time. So yes, we've lost 1,200, right? As far as the market gain or market loss, really. So for the month, we're down 3%. However, what's encouraging is that we did bring in 389 $89 in dividends this month. That's pretty good considering the portfolio size. And then here is the 3 month um, numbers. So we're down 11% within the last 3 months. Once again, you can see down 3,000 and change, but we've collected $800 in dividends in the last 3 months. Year to date, um, not much difference, right? Still down 11%. $908 in dividends, and we're down 3,000. And then for the entire year, you can see that we've actually gotten more dividends than what we lost as far as on dividend gain. So sorry, market gain. So the dividends are carrying us. We're only up 1% over the past year. But what's encouraging is the fact that yes, the portfolio might be down and we might drop. For me, I'm not panicking. I look at it as a chance to buy more, right? So I wish I had more dry powder handy, and I will this coming week, and I'm going to dump more money into this portfolio to buy all these positions that to me are on discount currently. So yes, I'm buying more. I'm holding, buying more. But however, you got to realize I'm not really invested in risky stuff. These are things I believe in. I don't think they're going to go anywhere. All right, let's take a look at what we're holding. So as you can see, SPMO has been our best performer this week, up 9%. And then I'm not gonna go through each one because it's gonna take a lot of time, and I don't want to. I know you guys have other things to do and other videos to watch, so I'm just gonna scroll down and let you guys see what's going on. Oh, let me actually sort it better. So AVGO, sorry, AVGO is our biggest performer this week, 24%, and then from there you can see Nvidia coming in and SPMO. I should have bought more Nvidia when it went down, but I'm sure there's more pain to come, so I'm sure we'll have more opportunity. And then for the month, here's our performers. Right, looks surprising. Misty is up 13% over the past month. A lot of folks have been waiting for this time to arrive to see how these cover call ETFs perform during these times, right? Times of significant market pullback, and with the added talks about tariffs and the volatility of the market, for it to be up 13% over the past month, and for the S&P 500 to be down 6% is actually a pretty good sign. But we'll see how we'll see if that continues to be a trend. I think folks who love these cover call ETFs should feel encouraged. You know what I mean, don't panic because remember, you're not investing in these things for growth when it comes to all these cover call ETFs. So if they're red, what you should be concentrating on is the dividends. Is the dividends being cut, right? Um, and so on and so forth, right? If that's not the case, then what are you worried about? Why are you selling? And if anything, don't sell it. Decrease the amount you're contributing, and when the dividends get paid out, instead of reinvesting the dividend into that same cover call ETF, you take those funds and move it into something more stable, like a SCHD or something like that, if that's what you're into, or VU or some other safer holding. But I wouldn't suggest anyone sell while they're down, because remember, you're only down right now. If you don't lock in the loss by making a dumb decision and selling. All right, let's take a look at some other things here. So activity, as you can see, this is what we brought in this week as far as dividends. Let me make sure we're only looking at dividends. So this is what we brought in this week, right? $36 from Misty, $9 from YMAX, 5 from XDTE, 31 from Misty. So right, 31 and 36. So we really got like 67 bucks from Misty, which is not bad this week. And then $5 from QDTE. And then let's take a look at our dividend portion of this portfolio. So right now we're averaging 226. I don't think that's changed much from the last time we've checked in. And then these are just the breakdown over the next few months. For the next 12 months, our average is 232. And for me, seeing this go up is big time for me, because that's what I really care about. Yes, the growth is a bonus, but I want to see this our average monthly income go up. But I'm not willing to invest in risky or dividend plays for that to happen. I mean, so that's why I'm buying more on the dip and having so much confidence in this portfolio's performance. Let's see, what else can I show you all? Right now we have some cash in the account. We have the dividends amounts, the dividend that we collected this week, plus I contributed I think $50 into the account this week. And then so these are the buys coming up next week. So we're gonna buy $52 from Maine, 39 from SCHD, 25 of VU, QQQI, and then BTCI. I really like these NEOS cover call ETFs. But anyways, y'all, I don't want to take up too much of your time. No, hey, market's gonna be going crazy. There's gonna be talks about tariffs. There gonna be talks about just yesterday. I think there were talks about the customs Customs and Border Patrol technology, phones or whatever else, iPhones are going to be exempt from tariffs and so on. I think looking forward to Monday might affect Apple and QQQ and a lot of these other tech stocks and ETFs might um might benefit from that news, right? Might be more bullish next week, but don't panic. Don't go selling everything and getting emotional because you might sell today and then tomorrow there's a 30% jump. You know what I mean? Like this is not normal on market conditions. However, the market we didn't just a nuclear war didn't just happen to where we're just doomed as a society. Businesses are still open. People are still going to work. Um, Technology is still being used. Or sorry, energy is still being used. Right? Don't panic. If you are scared, close the apps. Right? Step away and stop stressing over your account and come back at a later date. Or if you're somebody who's brave enough and understands what's going on within the market, buy the dip. Right? Buy the dip and just be in for the long haul. Understand it's going to be a bumpy road, but we'll get through it. Some of it is necessary, I believe, but I'm not gonna ramble anymore. Hey, have a good one. Take care.